Welcome back to the channel. Today we're talking about 3 picks that I found that are deeply discounted and they're setting up to be great opportunities, really good companies that can go back to all-time highs and really capitalize on 50%, 60, 70% gains that are almost guaranteed, because this is where those companies were and they're just getting pulled down with the rest of the market, which it shouldn't be happening. So when the markets rebound and they run back up, these 3 will rebound much faster and safer than the others. It's like pretty much buying Apple that would be down 30%, which it won't happen to Apple, but these companies can be somewhat comparable. Let's dig right in. So the first one I want to look at on the list is PayPal. If you don't know about PayPal, I don't know what you're doing, because PayPal does everything. Download their app, check it out. I use PayPal for all my banking needs, for sending payments between people, from buying things. I have a MasterCard, or I have a debit card, a cash card, I have a credit card. I could buy crypto on there. You could do everything with PayPal, and it's used widely everywhere. They are making billions of dollars every quarter in revenue. They're killing it. So looking at the chart right now on PayPal, this has sold off way too much. And I know a lot of retail investors. I've watched a lot of YouTube channels, whales. So many people are waiting to buy this, but they're not gonna buy it until it hits a bottom, which I think it just did. So that's why I wanted to talk about this one first. The other 2 picks, they might not be at the bottom just yet, and you have to wait. This one is at the bottom. Let me do a little quick technical analysis on this to show you what the potential is, how much you can possibly gain on this company. So PayPal is already a huge company. They're a tech company. So you know tech, they're not going anywhere. So they bottomed here. Now I simply just draw a line where the bottom of the lowest candlestick is on the current time frame. And if we look across, we can see that's lining up with other points of support. So let's just draw on here. We have an area here, we have an area here, and then we have some areas over here, and now most recently. So it's more than likely that this is the bottom and this is a support for PayPal. So me personally, I think it's such a bad thing taking a shot here, maybe doing a 20%, 30% position here and hoping that you are correct and other people are watching this point of support as well, and they're gonna start buying, pushing this back up. So if we were to figure out how much of a discount this will be, little measuring line from $180, which is where the support is, all the way to the peak of where PayPal has gone, and that's about a 70% discount you're getting. So 70% potential you can make on this investment. It's obviously not going to rocket right back up. PayPal moves with all the other blue chip stocks, bigger companies. This is a big company. This is a $220 billion company. So this ain't no little penny stock, rinky-dink little coin or company that is small and might go out of business. They're huge. So 70%. And they're obviously going to move up in waves, so that's why I say dollar cost average, somewhere in this range, 180 to 200, somewhere in there would be a safe area if this holds. If it goes deeper, it shouldn't happen. If it goes deeper, it's probably going to go at the lowest down to here, 166. Because if people holding this, institutions holding this, insiders holding this, let that level fail, they're coming all the way down to here, 120. They're really cutting their market cap down, which they're not going to let happen. So that's why I'm going with 180. 180, 200 would be a safe area. And this, of course, is going to probably find support around here and then start to head up. Okay, the second one now is Disney. Looking at the Disney chart, this one is beat down as well. It has fallen almost 30%. Disney has fallen. Another massive company, $266 billion. So now we want to find support on this one and have our alerts. A good way to wait until it hits this point rather than FOMOing in, using emotions. Have alerts set at these certain price points. Set the alerts around 136 is the support, which is what I will be watching, waiting to buy Disney when it hits this point. Because again, I look at areas where it's critical for insiders and big institutions to buy more at these supports to push it up, to then get retail's interest to buy it and push it up even further. Because if they don't, it's going to fall below and all their holdings are going to go red. They don't want to let that happen. So if that broke, we would then fall down to 127 and then all the way back down to 120, which is beyond where they were in 2019. We don't want that. 2019. So they're losing like 2 years of gains. They're not gonna let that happen. It already has sold off way too much. This is already a tremendous discount. So at 136, this would be a nice profit return of 47% on a massive company like Disney. We know Disney's never, ever going out of business. So it's only a matter of how long are you willing to hold this, and can you get the absolute best price? No, you cannot get the best price, but we could get a close price. So anywhere from 136 to like 145, I would be averaging around there and hope that this is correct and this is the bottom. So that is Disney. Now the final company we're gonna take a look at is Airbnb, another massive company coming in at a market cap of $100 billion. Airbnb has exploded after the pandemic. Everyone was throwing up their house for Airbnb. Everyone wanted to stay at an Airbnb. They didn't trust going to big, massive hotels. It's much safer when there's less people moving around if you're a little freaked out by Rona and germs and whatnot. So Airbnb, a newer IPO, which started earlier this year, trading at 166. Also have most recently great earnings and revenue. So let's find out where support is on this one, because this could be another great returner because it peaked out at 220 bucks. And the support on this one is at 155. So this is a great level of support to prevent this from falling down to the next lower level. That's what I look for in these charts, lower levels. Also, we want RSI to go a little ice cold. So if we look down here, we could see it went ice cold. If we get this down into the ice cold territory, which will most likely be around 154, 155, that would be a great indicator and catalyst for this to confirm that 155 is the bottom support, if we could go ice cold on RSI as well. So 155, if that's the case, then that would give us a nice discount of 42%. So 42% buy on this one. This is like Black Friday. And if you want to see more of these companies, because I did 14 of them, I can't fit all 14 in this video, click the link in the description. It will bring you into my Discord and you could see more of these companies. I put the discount amount, I put the entry price, all of the data on there, nice and neat. I spent the time finding out where the best point for this to turn around. All these nice blue chip, big companies to turn around at. Also, there's some lower cap companies in there that will yield way more returns, 100%, 150% returns. So click that link in the description if you want to see more types of companies like this and good entry points. So that's it for today's video. Those are the three that I wanted to talk about in today's video that I like. And like I said, there's a lot more other ones. That's it. Hit the subscribe if you like these videos, you want to see more of them. And by hitting that button, it's going to do magical things like get you a little bit closer to retiring young.